What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market, specifically what happened Friday with that CPI report, which was a disaster. I told you guys specifically I had a really bad feeling that gasoline prices was just going to overpower any good news with any other categories in inflation, and that's exactly what we saw. We hit a new all-time high, 41-year all-time high or something like that, and inflation is still accelerating, and they're expecting the next 1 to 2 months could also be potentially getting worse. Once again, on this channel, I want to make sure you guys are prepared for any bad news heading our way, and I believe we have some bad news coming next week with the Federal Reserve doing their, monthly meeting, going over, what type of rate hike they're going to do, guys. And we're getting some bad news that the 50-point base rate hike is going to be going even higher to potentially a 75-point base rate hike. So guys, we have a lot to cover inside of this video. If you find any of this information useful, be sure to subscribe to the channel. We will be keeping you updated daily. Be sure to smash the like button and don't forget to drop a comment. I'm going to be commenting back to as many people as I can. Let's get into the video. All right, guys, we can see inflation rose 8.6% in May, highest since 1981. Guys, that is absolutely insane. Surging food, gas, and energy prices all contributed to the gain, with fuel oil up 106% over the past year. I told you guys this was the one that just really had a bad gut feeling for me. The way gasoline has been accelerating the past month or so, I saw no chance that inflation was going to peak at all, and that's exactly what happened. And also, tech stocks continue to get hammered the hardest. And guys, this is the headline that the media is going to be running with, because this is what's selling. You do not see the Russia-Ukraine war. You don't hear anything about COVID anymore. The war and COVID, guys, that is not a headline that is going to sell to the media. You are not going to be seeing that. They're going to be going over what has the most fear, that's going to be getting the most views, the most ad revenue coming in. And guys, inflation is what the media will continue to run with. It is absolutely insane, how bad it truly is out there, with the media. And they are going to continue to run with this once again. Inflation sped up again in May, dashing hopes for relief. CPI 8.6, fastest in 40 years. Every single media headline. This is the New York Times. We were on CNBC, CNN. This is absolutely everywhere, and that's why you're seeing the stock market just absolutely collapse week in and week out. Right here is the Board of Governors Federal Reserve System. If we scroll down, we can see that we have to get prepared for the Federal Reserve meeting. Let's see what day it is. The FOMC meeting, 2-day meeting, June 14th and June 15th. So we're going to see a lot of info come out on Tuesday and Wednesday. I believe the rate hikes happen on Wednesday. So guys, this is what we have to be getting prepared for, because now they are going to be pushing a new headline to you guys about that 75-point base rate hike, guys. That is the headline that is going to be making the market sell off aggressively the next 2-3 days heading into that meeting. This is what the media is going to run with. That's why I'm making this video for you. We can see here the Nasdaq is down 20% on the year. I mean, this is one of the worst starts to a beginning of the year for the markets in decades, guys. But if we go to the top, we can see right now we are at about a 29% correction on the Nasdaq. I believe the high we did hit was about 31% at one point. So we are literally 1 day away from hitting a new record all-time low for the correction since the peak. So I personally believe we can get into the 40% range very easily if the next two CPI reports continue to accelerate, guys. So this is pretty crazy. We still have a lot of gains coming off from 2021, but I would like to see us creep into the 10,000 range on the Nasdaq, and that'll bring us back to ranges back in 2020, guys. At one point, if we get back into 10,000 on the Nasdaq. So that's what I really want to see, guys. I really do want to see a flush. So maybe we get the flush on Wednesday. Maybe the Nasdaq collapses 4 or 5%. That would be amazing. Just getting more of the high risk investments out there, the SPACs, the crypto, the pre-revenue. Okay, we really want to see that stuff just get completely flushed out of the market, because so many companies went public that should have not gone public, and we all know that by now. We all know Scott Wapner is a trained professional for media attention and stuff like that. He's trained by CNBC, and you can see as soon as that CPI report, boom, he came right back out with the 75-point base rate hike back on the table, and then talking about a 100-point base rate hike with Jim Cramer. You know, these guys are trained professionals to sell the headline, and they're going with it quick. And to be honest with you, this is most likely true, okay? I believe the Fed needs to accelerate. And guys, we want to see these rate hikes happen, okay? Enough with the 50-50-50. Let's just get it over with. Add in a 75-point base rate hike. Try to slow down this inflation by any means necessary, because it just looks like, you know, it's just everywhere, okay? It just does not stop. Oil, housing, energy, food. It's just across the board. So we have to do something to slow this inflation down immediately, because we don't want to get into the 9, 10, 11% range on inflation, guys. I mean, we're going to be going back, what, 60, 70 years past my, grandpa's days. So this is out of control once again. You can see here, Barclays, trader set sights on Fed rate hike of 75 basis points. Markets price 50-50 odds of bigger increase in July, September. Barclays, Jefferies see a 3/4 point hike next week. So it's not just Barclays, guys. It's Jefferies as well, okay? So the Federal Reserve, I'm telling you right now, they're going to be feeling a lot of pressure come Wednesday, okay? A lot of pressure. And I think it's a 50-50 chance that we're going to get a 50 or a 75. So be ready, because I'm telling you right now, if the 75-point base rate hike comes, we're going to see a sell-off on the tech-heavy side, specifically the Nasdaq. Be looking for a 40% correction in the Nasdaq, guys. I mean, I don't know how long it's take to go back, that far of a 40% correction. I need to look at the 10 to 20 year history, but I'm telling you, 40% correction in the Nasdaq is not something that happens, every other couple of years. All right, guys, we have the headline: the CNBC, a 75-point base rate hike wouldn't benefit the Fed or market. Wells Fargo, Michael S said this. So we have a Wells Fargo, maybe an analyst coming out trying to go, head to head with the Barclays and Jefferies headline. So guys, everyone has no clue what is about to happen. I'm just trying to get you guys prepared for a potential further deeper correction coming this week.
My next guest says inflation still hasn't peaked. That's what the market sees happening now, that we could see 9% readings in August and September. Meanwhile, we've had a couple of people now calling for a 75 basis point rate hike by the Fed next week. Annetta Markowska at Jefferies thinks the Fed will start hiking by that much beginning at the meeting next week. Barclays making a similar call this morning as well. Joining us now is Michael Schumacher. He's Wells Fargo's head of macro strategy. Michael, thanks. And for those who say, why did so much just change with this report, what would your answer be?
Yeah, it's interesting, Kelly. The Fed was hoping for a much more moderate report, and this one's just bad across the board. So goods inflation's up quite a bit. A lot of people thought, hey, maybe that would moderate after people focus more on services, less on goods. The headline number is terrible. I think we all knew about energy, but still, if you look below the surface of the report, it's just not very encouraging at all. So broad-based, high, bad for the Fed.
And as you speak, we have the Dow at session lows, Michael. We, again, as Rick mentioned, 10-year interest rate about 3.15%. If the Fed switches to 75 basis point rate hikes next week, what's that going to, we only have from now, Friday afternoon, until Wednesday to price that in. Is that what the market is pricing in right now?
No, the market's not ready for 75. I think that would be a stunning move. Big risk off move if that were to happen. I frankly be very surprised, and I think my colleagues at Wells would share this view. The Fed has really prepped the market pretty thoroughly for 50 next week. Now, perhaps Chair Powell comes out of the press conference and says, you know what, we just went 50. Inflation's not good. We're thinking about maybe going more aggressively in July, and really to set the stage for conceivably 75 in July, or more likely 50 to lock in September. That makes a lot more sense. But 75, just to throw it out there next week, I think it's too much too soon.
It's interesting, though, to watch a couple of different Wall Street banks now basically saying the Fed has to do that. They're saying they have to, and that they even think they will, which you and I institutionally would agree it seems like a long shot, right? For the Fed to go to 75 in just a couple of days would seem almost absurdly impossible. And yet they're saying it should be considered a very real possibility. The only mechanisms left by which they could signal that kind of abrupt shift would be basically through a report in the Wall Street Journal. There's a quiet period, right? We can't hear from Fed officials themselves.
That's right. And it would be, I'd say fishy would be generous if the Fed were to leak a report to the Wall Street Journal or CNBC or anywhere else and say, hey, yeah, we really are thinking 75. We know it's the blackout period, but we don't necessarily adhere to that. I can't imagine the Fed doing something like that. The loss in credibility would be huge. Much better off from the Fed's perspective to do the 50 next week, talk about raising the dots and all that fun stuff. And again, to set the stage for maybe 75 later on, or more likely just to communicate to the market, this tightening is going to go on a while. Probably it means a number of rate hikes that are pretty significant, 50, give or take, throughout the year, some 25s perhaps late in the year, but also going into next year. 75 next week doesn't seem to get the Fed a lot of benefit, and there's a lot of downside that comes with it.
Let's talk about the inflation trajectory. Is the market, you think, looking for 9% headline reports now in August and September? And September was supposed to be the month that we were all talking about. Maybe they'd only hike by a quarter point, or maybe they'd take a pause. Is that out the window now?
That's part of the problem here, Kelly, and Bob alluded to this. This idea of peak inflation doesn't really work anymore. So yes, the market is pricing 9+ out in September. And that's sort of depressing. And the clients I've been talking to for the last few weeks, for a lot of them, September has been that pivot point for Fed policy. Would the Fed actually pause or go 25 or at least be more market friendly in September? And now it seems a lot less likely. And that's perhaps the most discouraging thing about the report this morning.
All right, guys, you can see this guy, in my personal opinion, is taking a guess. He has no clue what is about to happen Wednesday, okay? He's going against Jeffries and Barkley's, suggestions. So as you can see, nobody has any clue what's going on, but you can see the Wells Fargo guy says the market is not ready for a 75-point base rate hike. So if it does happen, that's what I'm telling you guys, we could get a 4 to 5% correction on the Nasdaq. That is going to bring us to 34 to 35% correction, guys. Once again, I could see us, corrected as much as 40% in the next, month or so. The way this inflation is going, guys, if the Federal Reserve does not get this under control very soon in the next, 30 to 60 days, the stock market is going to continue to sell off, and you're going to see some of these mega cap companies down 50, 60%. Those are companies like Amazon, Microsoft, Facebook, the big ones, okay, the biggest companies in the world. Those are going to be looking like penny stocks pretty soon. So there's a lot to be prepared for, guys. Once again, the Federal Reserve meeting is Wednesday. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. There's not a lot you can do right now as an individual investor. Just know that these are, records across the board and over 40 years, okay? So these are definitely going to be buying opportunities, but you want to get your buys coming in as close as possible to when inflation finally starts slowing down a little bit and starts a reversal trajectory downwards, okay? Because if we go higher and higher to 9-10% inflation, stocks are going to continue to go lower and lower because the risk on is going to continue to get sucked out of the market, and that's what we're seeing. And pretty much no company at this point, besides those oil stocks, are really doing very well. And that time for those oil stocks will also come to an end soon as gas starts rolling over. So we have a lot to get prepared for next week. It sucks. It absolutely does suck. I agree. This is a very painful time, but this will make you a better investor if you can hold through this, high volatility. We should get by this by potentially the end of the year, hopefully, and maybe 2023 will be a great year. But understand, the lower, the indexes go, the lower your risk. Once again, my name is Kyle. Hope you have a great day.